Crashing markets, low supply. What really is happening in Calgary's real estate market? Hey everyone, it's Hripko with the Hripko real estate team here in Calgary. And today we are going to review what has happened in Calgary's real estate market so far in 2023. If you haven't already, I do ask you if you could hit the like button and subscribe to my channel to see any more videos that we have related to Calgary's real estate market. As we've all been hearing what's happening in the news, there is a lot that's going on in our country, from correcting markets to increased activity and multiple offers. Let's get to the bottom of it and see what really is happening in Calgary. Overall, we are seeing the level of new listings at record low levels seen since the late 90s. And this is true for nearly every price range here in Calgary. We did see some sales activity slow down compared to 2022, but it has been staying fairly consistent with the long-term trends. What really is interesting is what we are seeing a shift in the composition of sales, where the detached homes only accounted for 47% of all sales, whereas they were much higher in 2022. So why might this be happening? Mainly because of the higher lending rates causing buyers to seek out lower priced products such as townhouses or condominiums. And these higher rates are also likely preventing some move up activity in the market, which is impacting the supply growth for lower priced homes, leading to differing conditions seen in our marketplace based on price range and property type. So the inventory levels are sitting 43% lower than the long-term trends at 2,451 units. While overall inventory levels are slightly lower than last January, there is significant variation by price range. Homes priced under that $500,000 mark recorded year-over-year inventory declines of nearly 30%, while inventory levels improved for homes priced above $500,000. With the lower supply levels, this is preventing a significant shift towards more balanced conditions, leading prices to trend up slightly. Overall, City of Calgary benchmark price is sitting at $520,900, which is about 5% higher than last January, but still well below the May 2022 high of $546,000. So let's take a deeper dive into the specific product types, starting off with the detached product. So this is where we're seeing the largest pullback despite the year-over-year rise in inventory levels. So the higher lending rates are cooling the demand for higher priced homes, leading to inventory increases. Conversely, there is a limited supply of lower priced product, which is preventing stronger sales in those lower price ranges. The variation within the market is likely causing divergent trends in pricing, and prices have trended down in the higher priced city center, whereas we are seeing some modest gains in other districts of the city. So because we're having that off balance there, the overall benchmark price has gone down. It's sitting around $622,000. Inventory levels are sitting just above 1,100 units, and the months of supply sitting at 2. Of course, this is for the entire city of the detached product, and for specific neighborhoods, it definitely has some variations. Looking at the semi-detached product, sales in January had slowed down compared to what we saw in 2022. However, they are above what we were seeing pre-pandemic. So in this sector, we are also seeing a pullback in that new listing, which is leaving inventory levels quite low. Similarly to that detached sector, these homes have seen shifts where the demand remains strong for lower priced product relative to the supply, likely causing divergent trends in pricing. So most districts reported a monthly benchmark price gain. However, we did see prices trend down in those higher price city center districts, which did cause the overall benchmark price to ease slightly to $559,000, which is nearly 6% higher than levels reported last January in 2022. Now on to the townhouses. Row sales slowed over last year's high, but continuing to see levels sit above the long-term trends for the month. The persistently tight conditions in the sector prevented any downward pressure on prices, which allowed the sector to see nearly a 1% gain over December levels. So the benchmark price here is sitting at $341,000, and that's over 12% higher than last January and only slightly lower than the high that we saw back in June 2022. So lastly, let's touch on condominiums. Sales in this sector did not see the same pace of decline as other property types, and this is partly due to the level of new listings that came onto the market. Interestingly enough, inventory levels continue to remain well below the long-term trends for the month, and it hasn't actually been this low in January since 2014. So this might be a sign. The adjustments to both sales and inventory have left the sector with a months of supply that is lower than levels seen at the start of 2022. So we are seeing a huge shift to more affordable options, which is impacting the price point within the sector. Majority of the sales in this market are occurring in the under $400,000 range, which is impacting the higher priced product. We still are seeing those units stay on the market a lot longer than, say, a unit listed at $250,000. Prices did trend up, and that's mainly due to those gains in the lower priced areas, especially the Northeast and the East. So the benchmark price right now is sitting at $277,000, which is 1% higher than December and a year-over-year gain of nearly 10%, which is narrowing that spread from the record high for prices that we saw back in 2014. So that's what we have this month. What do you guys think that the February market will bring in Calgary? Comment below what your thoughts are, and thank you so much for taking the time to watch this video. I will see you next time.